welcome to FinextraTV. I'm Hannah Wallace, and kindly calling into our virtual studio today is Torsten Pull, Senior Vice President, General Manager for Corporate Banking at Finastra. So, Torsten, welcome. Thank you very much for calling in.
Thanks for having me.
No problem at all. It's good to have you on. So, today we're talking about Finastra's latest corporate banking research ahead of Finastra Universe, which will kick things off looking at some of the changes accelerated by COVID-19 and also how to rebuild for better outcomes post-pandemic, which is sort of the line of thought I'd like to begin our interview on today. So as we put 2020 behind us, what do you think are some of the main changes you've seen around corporate banking in particular, and how does this compare to the year to come? Let's start there.
Yeah, sure. So corporate banking has undergone a digital and technology transformation, a shift that has really reimagined relationship models by increasing access to banking services for a range of different businesses, regions, and of varying revenue levels. So moreover, the pandemic has brought the future forward. Accelerating digital transformation have forced banks to adapt the operations and services in all of lending, trade, and cash management. So corporate banks find themselves with the same expectations as they offered in retail, a very different approach that they need to be taking going forward. So we did a research of over 700 heads of relationship, heads of technology, and heads of product across global banks. And they show that corporate priorities around the world are changing over the next 5 years. Our research found the biggest shift is that corporate banks are moving away from the traditional relationship builder approach of client interaction and management, building wider banking relationships with clients to cross the additional services, to a far greater focus on being platform players and offer value-added services. Specifically, if you look into banks, corporate banks now moving into SME banking, where there's high volumes, you can't manage that with the same extent when it comes to relationship management like before. So there needs to be much more automation and digitization. And if you look at it, corporate customers will prioritize online banking. They want value-added services and real-time services above the normal bank's range of products and services that they have been offering around account and relationship management. So that doesn't mean that banking and relationship management is completely changing, but a relationship manager needs to be able to access much more insightful data for quicker decision making. And that's where technology is going to play a major part.
All right, and we'll talk a bit more about that technology, but it's interesting you've pointed out there's been a slight shift in priorities. So taking all of that into account, then what would be your advice to those banks transforming and looking to achieve growth? What about that?
I think it's really time for the banks that haven't started their journey to invest in new infrastructure and digital requirements necessary for them to achieve their vision. So banks will need to change their business model to be ready for the future and accelerate their growth. So moving, as said earlier, beyond the traditional relationship model, transitioning into digital-powered, end-to-end platform-driven corporate banking. And the need to diversify in an increased globalized world, they must act now to equip themselves with more flexible and dynamic products and services and faster and better informed decision making. This might be via automated services or real-time analysis and reporting, and modern tech will play a pivotal role in allowing that to happen. At the same time, right, corporate banks are worried about regulation and data security. And traditionally, corporate banks have been risk averse, but focusing only on this will not enable them to remain relevant. So if we look into what the surveys showed us, so 80% of lenders said that account validation was a key digitalization priority. However, over 80% also said the regulatory compliance was a priority for digitization. So bank will need to address customer and banking pain points in order to remain relevant, as business and commercial banking priorities shift towards digital enhanced relationships. So you need to tackle that from both ends. And between 17 and 23 of banks said that cloud technology is needed in their response to COVID-19, but lots of them don't have currently access to cloud technology. So the investment needs to start now. And also just simple things, and where lots of operations and client interaction has been disrupted through COVID, digital signatures is not available to lots of corporate banks, and they're still reliant on paper. So an investment into infrastructure, when it even comes to simple things like digital signatures, is needed. But the appetite to change does exist. Over the next 5 years, if you look at it, digital transformation annual budgets within corporate banks are expecting to increase. So the need is identified to change the infrastructure that banks have to solve their clients. In cash management, trade finance, banks expect digital development budgets to grow by around 30%. That is promising for us as an industry, but also very promising for the client, who can expect a very different digital engagement going forward, close to a retail experience that lots of clients are used to already.
That's interesting. So watch this space, I think it's safe to say. So finally, let's talk a bit more about the technology. What do you think is the role of technology in accelerating through change, and also why is it so important for banks? Let's end on that.
Time to market, time to value. So the need to deliver faster and more agile and more tailored corporate banking solutions is driving a lot of that demand. The relationship management, when it falls in significance slightly, banks are turning their focus to meeting clients' desired by value-added services and real-time access and execution. So really, by an end-to-end digitization and using new technologies will enable that. If you look at the current experience that a lot of corporate banks will be having, it will be disjoint and online portals. They will potentially have a different portal for trade, cash and lending, not only a different potentially look and feel, but also no interaction between them. And how modern technology can play a massive role is really bringing these products together. So for example, if a bank uses machine learning and AI for cash forecasting and can predict that a client is going to be running out of cash, they can proactively, as a next best action, suggest a lending product for their client, not at the point when it's too late, but way in advance before it's happened, because they understand the pattern of their client. So really, technology can make a massive difference in experience from a client standpoint, by the bank becoming a trusted advisor based on history of the client using technology. And if you look at it, the COVID accelerated digitization has exposed gaps in corporate banking when it comes to the offering to their clients. And what banks need to do is really invest into cloud technology, because it's much easier to access for partners, and therefore will drive innovation and collaboration between banks, fintechs, and their corporate clients. And the agility and expertise of the fintech partners will be essential for that. A lot of banks have understood that they can't develop everything themselves, and to become very flexible and open, they need to invest into platforms. And the good news is that 70 to 75% of banks are already working with fintech partners or plan to do that in the next years. So there is a shift clearly noticeable. That banks don't see fintechs as a threat anymore. They might be worried a bit more about big techs, but fintechs are clearly seen as a partner in achieving their targets going forward.
All right, that's interesting. Thank you for clarifying that. And I urge anyone who wants to learn more to go to that research. But for now, Torsten, we'll leave it there today. Thank you so much for calling in. It's been a pleasure.
Thank you very much for having me.